Yeah.
Okay, so okay, guys. See, in the previous session, we discussed about the bank reconciliation process, guys. So today, let's discuss about balance sheet reconciliations. Okay, so balance sheet reconciliations. So before understanding that, understand what is balance sheet. Balance sheet. Balance sheet is a financial statement which shows the financial position of the company. It shows the financial position of the company. So balance sheet consists of different components, guys. That is assets, liabilities, and equities. Equity. It's very important technical question. Components of balance sheet. Components of balance sheet. So what are the major components of balance sheet? Okay. So assets, liabilities, and equity. So assets are divided into two types. One is
So, bro, share your screen.
yes, contability. Is it visible or not, guys?
Yes, visible it is.
Yes.
Yeah, the people who have issues kindly rejoin, guys. Okay. So fixed assets and current assets. So fixed assets again divided into tangible assets, intangible assets. Okay. Tangible assets and intangible assets. Tangible assets are what are the tangible assets, guys?
Which we can touch and which we can feel.
Land, building,
Missionary.
equipment, furniture, machinery, vehicles, laptops, desktops. Okay, all are tangible assets. Okay, all are tangible assets. So intangible is nothing but the asset which
Goodwill.
which
Which
does not
cannot
have
see.
physical existence. Okay, so the asset which does not have physical existence. Intangible assets are goodwill,
Goodwill. Patents.
patent rights, copyrights, trademarks. Okay, goodwill, patent rights, copyrights, and trademarks. Okay, sorry. Okay, so these are intangible assets. I can't able to hear what are you doing. So in terms of current assets, the asset which can be easily converted into cash within a standard of time. Cash, bank, inventory, accounts, receivable, sundry, debtors, prepaid, expenses. Okay. So the next component is liabilities. Liabilities are two types, guys. What are the two types of liabilities? Long-term liabilities. The liabilities which company has to pay more than a year is called long-term liabilities. What are the long-term liabilities we have? Long-term debts, long-term loans, long-term loans. Okay. So long-term long-term leases. So what are the current liabilities we have? What are the current liabilities, guys?
Prepaid revenue.
Deferred revenue. Deferred revenue. Short-term loans. Payroll liabilities. Accrued expenses. What else, guys?
Salaries also.
Sorry.
Salary.
Accounts payable, salary payable, outstanding salaries. All are the examples of current liabilities, guys. We have one more thing. Equity is nothing but company shareholders. So in equity, what are the things are involved, guys?
Equity shares. Share capital.
Yes, it includes share capital. Share capital. It again divided into various things. What are the different types of shares we have, guys?
Preference shares.
Equity shares, debentures, mutual funds.
Funds.
So apart from this, we have retained earnings. Retained earnings in the equity, guys. So these are the various components of balance sheet. Normally, we can look onto the balance sheet. Balance sheet consists of this many things. So what is the equation of balance sheet? Accounting equation or equation of balance sheet. Accounting equation or equation of balance sheet. What is the accounting equation, guys? Assets equal to liabilities plus equity. What is the accounting equation, guys? Assets equal to liabilities plus equity. So balance sheet reconciliation is a process of reconciling each and every account in the balance sheet is called balance sheet reconciliation. So balance sheet reconciliation is the process of validating the each and every account. So as I told you, some people will get a chance to work on liabilities. Some people will work on deferred revenue accounts, short-term loans, payroll liabilities. So some people will work on inventory, accounts receivables, sundry debtors, prepaid expenses. So some people will work on goodwill, patent rights, trademarks, like that. So like each set of account is being engaged with each set of reconciliations, guys. Okay. So tangible assets, intangible assets, current assets. Clear? So this is the balance sheet equation, balance sheet uh, reconciliation, guys. See, what is the meaning of balance sheet reconciliation? It is a process of comparing, process of comparing two sets of data in balance sheet accounts to check the accuracy, accuracy of balance sheet. Okay. See here, first let's take about fixed assets reconciliation. So what is the meaning of fixed asset? Fixed asset is nothing but the asset which is purchased, the asset which is purchased to generate the revenue of a company in a long run. The asset which is purchased to generate the revenue of a company in a long run. It's called fixed assets. Okay. So fixed asset reconciliation is a process of, say, process of comparing fixed assets general ledger, fixed assets general ledger versus right, registers or subledgers or trackers. it will be called as. So as I told you, for every company in the back end, what is the important thing they will maintain is. So for fixed assets, what is the important thing they will maintain in the back end? For every fixed assets, the company will maintain the trackers. What is the use of trackers? To understand what is the total assets, what is the total value of the assets. So to understand that, companies will maintain the fixed asset trackers, guys. Yes, yes, understand?
Yes.
So fixed asset tracker, so here they're comparing by what are the two important things. What is the data which is recorded in general ledger versus fixed asset trackers. See, major reasons for differences in fixed asset account reconciliation. Fixed asset account reconciliation. What are the major reasons of fixed asset account reconciliation? So the major reasons of fixed asset reconciliation is, so asset is ready to capitalized, but it is not been it is not been recorded. Asset is ready to capitalized, but it is not been recorded. So reasons for fixed assets reconciliation. Fixed assets reconciliation. So the important thing is uh, the asset is ready to capitalized, but it is not been recorded in the books of accounts. So here we are comparing fixed asset matching the data between fixed assets general ledger versus fixed assets register. So the main reason is capitalization differences. Okay, so that will be called as capitalization differences. Okay, so capitalization differences, depreciation mismatches, depreciation mismatches, depreciation mismatches, and we have another reason is due to any manual errors, manual errors, manual errors. Okay, so retirement, asset retirement, asset retirements not posted, asset disposals not posted, not posted. So asset transfers not recorded properly, asset transfers are not recorded properly. So these are the various reasons of differences in the fixed asset account reconciliation. So what is the differences in the bank reconciliation, guys? We discussed. What are the differences in bank reconciliation? What are the major reasons for differences in the bank reconciliation, guys?
Bank
Check
charges,
bound.
Yeah,
check
bank
issued
charges.
check issued but not cleared, check
Yeah,
issued.
bank charges, interest charges, checks dishonor, manual errors, auto debits, auto credits. So what is the meaning of capitalization? Capitalization is nothing but bringing the asset into the consideration. So once asset is purchased, what account we will debit, guys? If you purchase the asset, which account will be debited? Which account will be debited, guys?
Asset account.
Sorry?
Cash book.
Purchase account.
Asset account.
I told you in the fixed asset cycle, if you purchase the asset, they will not directly debit to asset account. First, they will which account they will debit? What is meant by AUC, guys?
Asset under process.
What is the meaning of AUC? Yes, what is the meaning of AUC? What is the meaning of AUC?
Construction.
Sorry?
Asset under construction.
Yeah, asset is under construction to vendor account. So while capitalization of asset, what is the entry we will record?
Asset capitalization account.
Can you go back and check to the fixed asset cycle, guys? I explain. What is the entry we will record here? Asset account debit to asset under construction account. Clear? So here, what is the, I'm telling asset is ready to capitalize, but it is not being capitalized. So example, machinery account closing balance as per general ledger per February 26 is 0. Same machinery account closing balance as per fixed asset tracker for Feb 26 is showing, the asset is showing 1 lakh. So here, what are the two important parameters we are comparing, guys? One is GL, one is tracker. In the tracker, the machinery account is showing how much balance? 1 lakh. In GL, how much balance it is showing, guys? 0. Is the GL and tracker is matching?
No.
So in the tracker that is maintained by the other team, they have been updated that asset is ready to use. The total value of asset is 1 lakh. So what is the reasons for differences? Differences 1 lakh. Reasons are due to capitalization entry not posted in the month of February 25, February 26. Okay, so capitalization entry not posted in the month of February 25. So if the entry is not posted, it will reflect in the books of accounts, guys. So in the tracker in Excel file, they are telling us 1 lakh rupees has to be the total value of asset. If the transaction is not posted in the books of accounts, will it be matched?
No.
No.
Yes, it will match.
No.
So these cases, we need to treat that as a open item. We need to treat that as a open item, guys. We need to treat that as a open item. So open item in the sense, we need to, this has to be treated as a open item. Okay. So what is the rectification entry to be posted for this account? What is the capitalization entry, guys? So this will be treated as required. So sorry, it is to be treated as a timing difference. So due to timing, entry is missed to post. Due to the timing, the entry is missed to post, guys. Okay. Due to the timing difference, the entry is missed to post. So what is the entry to be posted here? What is the capitalization?
Asset account capitalization.
Asset account debit to, that is machinery account debit. What is the money? 1 lakh to asset under construction account. So after posting this entry, what will happen? Your machinery balance and both balances. What will becomes to machinery balance, guys?
1 lakh.
Yeah, it will becomes to 1 lakh. It will becomes to 1 lakh, guys. It's understand?
Yes.
Okay, so this is one of the frequent case of asset variances. So the next is depreciation mismatches. Okay, so depreciation mismatch. See guys, nowadays depreciation will not be done manually. It is an automated process. So what are the reasons for depreciation mismatches? The main reason is like example, you need to update the date of capitalization. Depreciation will be calculated based on the asset capitalization date. If asset is not capitalized, will the asset will get depreciated, guys? Will the
No.
asset get depreciated? No. So that is the primary case. Okay. And another reason why it be depreciation posted in general ledger but not updated in fixed asset tracker, fixed asset register. So example here, assume the both the balance is showing here asset balance as of GL it is showing 90,000. In the tracker it is showing 10,000, 1 lakh rupees. So the differences is 10,000 rupees.
10,000.
Reasons of differences here. What is the reason of differences, guys?
Depreciation.
Depreciation. So depreciation has to be posted in the current month, but it is not been posted. Depreciation has to be posted in the current month, but it is not been posted. Okay. Depreciation has to be posted in the current month. So it is been posted, but in the fixed asset tracker, they did not update it. So we need to request the fixed asset tracker team to update that. Okay. No need of posting any entries from our side. Okay. And another reason in the depreciation is depreciation rate mismatches. So that means, so instead of updating 10%, it has been updated 20%. See here, fixed asset tracker is register is showing 80,000 rupees, but the fixed asset tracker is showing 90,000. So actual depreciation is 10%, guys. So actual depreciation on the machinery is 10%, but in the fixed asset general ledger while processing the transaction, they have been wrongly calculated the depreciation. Instead of 10%, they have been taken the 20% of depreciation, guys. Is my general ledger and fixed asset tracker is matching, guys?
No.
Why it is not matching? Because of different depreciation rate mismatches. So due to depreciation rate mismatches, guys. So instead of that, they have been taken this. So we need to, what is the rectification entry to be posted here? If you wrongly credited the machinery account, accumulated depreciation account debit, we need, what is the journal entry for normal depreciation, guys? Depreciation account debit to accumulated depreciation. You want to decrease the depreciation, what needed to be done? You have been posted for 20,000. You want to decrease 10,000. What needed to be done, guys? Accumulated depreciation account debit to depreciation account. Clear?
Yeah.
Okay. So sometimes, as I told you, system errors. So system errors due to depreciation is not completely run. Depreciation run is unsuccessful. So unsuccessful. So due to that also the depreciation will be like in our general ledger it is showing, see example, in general ledger it is 1 lakh rupees, it is showing 1 lakh only, but in fixed asset tracker it is showing 90,000 due to depreciation entry is not that run is not successful. Due to that we set up with the balances. So we need to post the rectification manual entry. So if the system is not automatically run, what we need to do, guys? We need to do manual entries. Sorry, we need to do the manual entries, guys. Okay. So what is the entry for depreciation, guys?
Depreciation account is also accumulated depreciation account.
Depreciation account debit 10,000 to accumulated
Depreciation account.
Okay. So after posting this entry, what means the machinery value will becomes to
1 lakh.
is it 1 lakh?
90,000.
90,000. The value will get decreases, guys. Okay, understand?
Yes, sir.
Okay, so the next is manual errors. Manual, yeah. See, manual errors. So, in assume missionary account as of general ledger is showing 2 lakh rupees. 2 lakh rupees. Here it is showing 1 lakh. In register it is showing 1 lakh, but in general ledger it has been recorded as 2 lakhs, guys. Okay, so what is the reason? Manual entry. So example, laptop purchased for 1 lakh, wrongly debited to missionary account. So if you debit missionary account and credit missionary account debit 1 lakh rupees to vendor account, the asset balance will increases or asset balance. What is the missionary balance will shows, guys? Here already we have 1 lakh. Now what is the missionary account closing balance? It will shows if you post this entry.
2 lakhs.
It will shows the 2 lakh rupees. Okay, so missionary account debit to vendor account. Missionary account debit to vendor account. So why it went wrong? Due to manual errors. So instead of debiting one account, we used another account. So due to this also, now the error might happen. So what can be done, guys, to rectify these balances? What is the rectification entry? What is the rectification entry, guys? Instead of missionary, instead of laptop, we use the missionary. What is the rectification entry to be done? Guys, what is the entry to be rectified? Which account is wrongly debited, guys? It is also be called as reclass entries. It is also be called as reclass. Which account to be debited here now? I purchased the laptop. It is wrongly debited to missionary. What account I had to debit, guys? Laptop account debit to missionary account. Okay, so this entry is also be called as reclassification entry. If anyone asked, can you give me the example of reclass entry? We are reclassing the balances from one account to another account. Guys, understand?
Yes.
Clear? We are reclassing the balances from one account to another account. That is called reclass entries. Or else you can do the reversible method. What is the reversible method, guys? No companies are doing right now, but for your information. So instead of debiting laptop missionary, we debited. So we will debit the vendor account to missionary account 1 lakh. So again, rectification entry. What is the rectification entry? Laptop account into missionary bank account or vendor account. Okay, clear? So this is 2 entries. No one will prefer to do this method. Most of the people will use direct entries, guys. Clear? Yes, understand?
Yes.
Okay, so this is the entries, guys. One is direct and this is the another method. Okay, fine. So this is about the manual errors, guys. This is about the manual errors. So what is the first reason we discussed? Capitalization differences, depreciation mismatches, and manual errors. So asset is retired, but the transaction is not been recorded. Okay, so asset retirement, but not posted in the GL. See, assume this is the machinery account. So in the fixed asset tracker, the asset got retired. It becomes to zero, but it is not been recorded. So asset retirement in the sense, so fixed asset GL balance is showing how much amount? 1 lakh. But in the fixed asset tracker, how much amount it is showing? 0. That means asset got some physical damages and it is been retired from the books of accounts. But the transaction is not posted in the GL. So GL and asset tracker is matching, guys. The data which is maintained in the physical tracker, is it matching?
No.
Is it matching, guys? No. So
No.
what is the entry to be recorded for this? What is the entry, guys? So if the asset retirement on loss or asset retirement, what is the entry we will debit? Accumulated depreciation account debit. Depreciation account debit 1 lakh rupees to asset account, that is machinery account. So without sale, we are moving the asset, retiring the asset from the books of accounts. So after recording this entry, what is the balance? It will becomes to machinery balance in the ledger. It will becomes to
Zero.
how much? 0. So the next is asset disposal entry not posted in the books of accounts. In the books of accounts. Okay. So assume the same example. The asset is becomes in the 0 and it is see what is the asset value asset purchased, guys? Assume asset is purchased for how much amount? 2 lakhs. What is the net book value now? What is the net book value now? Net book value 1 lakh rupees. What is the total accumulated depreciation, guys? If asset is purchased for 2 lakhs and now the asset is showing 1 lakh, what is the accumulated depreciation?
1 lakh.
1 lakh. Okay. So asset is sold for 1,20,000. So what is the is it a profit or loss on the asset
Profit
sale?
20,000.
Last.
Is it loss? Your asset is 1 lakh money. You're selling for 1,20,000. Is it a loss or profit?
Profit. 20 profit.
It's a profit. Correct? It's a profit.
Yes.
So asset is sold on profit. So what is the transaction here? It is asset is sold on profit. So the transaction itself not posted. So in the books of accounts, it is showing as 1 lakh. In the tracker, it is showing as they sold for 1,20,000. So what is the entry for asset sold on profit? Entry for asset sold on profit. What is the entry, guys? Bank account debit 1,20,000. Accumulated depreciation account debit. What is the money, guys? What is the to profit on sale of asset?
20,000.
20,000 to asset account, that is machinery account. Machinery account. What is the money, guys?
1 lakh.
2
2
lakh. The
lakhs.
total value of 2 lakhs, right? Correct. It has been accumulated depreciation. Now asset value is 1 lakh. Clear?
Correct.
So same way, asset is sold for 60,000. Asset is sold for 60,000. So is it a profit or loss, guys?
Loss.
Loss.
Entry for asset sold on loss. Entry for asset sold on loss. So what is the entry to be recorded? Bank account debit 60,000. What is the loss on sale of asset, guys?
40,000.
60,000.
40,000. Accumulated depreciation account. What is the amount, guys?
1 lakh.
Lakh.
1 lakh. To asset account. That is machinery account. What is the machinery account value? Total value 2 lakhs.
2 lakhs.
Guys, understand?
Yes, ma'am.
Understand, guys? So this entries is forgot to post in 1 month. Due to that also, we will get with the differences, guys. So we discussed about various things. One is asset under construction. Asset is capitalization differences, depreciation mismatches, manual errors, asset retirement not posted, asset disposal not posted, asset transfer not recorded properly. Asset transfer not recorded properly. So what is the meaning of asset transfer, guys? What is the meaning of asset transfer? To which they will transfer the assets?
One
Asset
branch to another branch.
transfer not recorded properly. So to one legal entity to another legal entity, they will record. See, while doing the asset account, example, the same machinery account, the closing balance is showing 1 lakh, and so assume asset is transferred from A company, A legal entity to B legal entity. But while recording the transaction, it is recorded as transferred to C legal entity. So while from where to where the asset is transferred, guys?
A
Assume
to B.
asset cost is 1 lakh rupees. So from where to where the asset is been transferred? A
A
to
to
B. So in the books of A, what is the entry they have been recorded? In the books of A, what is the entry to be recorded, guys? If they're transferring the asset from one legal entity to another entry, is it A is a receivable or payable?
payable.
A is a payable. Asset is transferred from which legal entity to which legal entity, guys? A to B. A is a payable.
receivable and B is the payable
From whom they need to receive the money?
from B.
B. But in the books of A, it is recorded as intercompany receivable. C account. Company receivable C account debit 1 lakh rupees to machinery account. So who in which books they have been recorded, guys? They have been recorded as C. In the books of B, they have been recorded as machinery account debit 1 lakh to intercompany payable A account. So in the books of B, they have been recorded directly. It is to be payable to A. But in the books of B, in the books of B, they recorded correctly. But in the books of A, the asset transfer is recorded to whom?
C.
Is recorded to whom, guys? Is it correct?
No.
What is the rectification entry to be done in the books of A? In books of A. What is the rectification entry in the books of A, guys?
Machinery account data.
Sorry? So we wrongly debited which account here? Which receivable
Yeah.
account we debited wrongly? C. So which account to be debited actually?
B.
B. So intracompany receivable account B account debit 1 lakh rupees to intercompany receivable account. Which account?
C.
C. Yes, understand? So like this kind of mistakes will happen in the regular businesses in the fixed asset case. Yes, understand the reason of differences. Is clear? Is understand, guys?
Yes, bro.
So these are the main reasons for asset differences in the fixed asset account, guys. So what are the main reasons? One is capitalization differences. Another one is depreciation differences, depreciation mismatches, manual errors, asset retirement not posted, asset disposals not posted, asset transfer not recorded properly. So when it comes to bank reconciliation, what are the major reasons? Bank charges, interest charges, checks dishonor, manual errors, auto debits, auto credits. So these are the various cases. Clear? Yes, understand this? Yes, clear? Okay, guys. So this is about the fixed assets differences, guys. This is about the fixed asset account reconciliation differences. Okay. So tomorrow we'll see about the another account reconciliation, that is payroll or prepaid accounts, guys. Okay. Sure. Thank you, guys.